Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the Forex market again. So, as you could see, the actual release of the CPI numbers on Friday has become the decisive moments for the markets. Those of you who are watching our weekly reports, it probably was not a surprise to you, because actually a few months ago, when it's just speaking about the 2% target rate of inflation by the Fed Reserve has started, we said that is totally absurd. So based on structural problems in the United States economy, that can't be the 2% limits with the CPI numbers around 8%. And a few weeks ago we also said that whatever Fed will do with the interest rates, it makes very limited impact on the performance. They could put the limit on the fiscal part of the inflation, but this is really a very small part of the current problems, and that's why the impact of this rate change will be very small, and it can't hold the inflation. And that's actually what we see currently in the recent CPI report. And this tendency will continue. As we said, the only way how Fed could control and provide some breaking changes in this situation if they will raise rate right to the 8%. So lead to the nominal rate to around 0. But that will be total crush for economy, and this will be really tragedy for the households, for the people. It will become the shock therapy for economy, because it crushed consumption and crushed the industrial production in the United States. So what we expect in general, mostly the same. So we think that inflation will remain high, and soon we expect the deteriorating of the common indicators. So already we see the rising of the initial claims. We expect the problems in real estate sector, in mortgage sector, and banking sector. So gradually we will bring more and more information in our weekly reports. Maybe on next week, because I would like to, but I can't put everything in just one report. But there are lots of information that we need to cover. So I tried to put some information tomorrow on the gold report, where we will discuss the banking sector in the United States, the problems that it has, and why it makes an impact on the overall situation as well. But we expect the deteriorating of the current situation. And today, in today's weekly report, we shed some light on energy sector, why it is important, what the really pitfalls and problems it has, and why it has actually a relation to the Forex market. This is because of some interesting moments in United States export of the hydrocarbons. If you read the report, you understand what I'm talking about. And coming to the winter and late autumn, we expect that it might be really big problems in European Union. So the fundamental picture that we have discussed doesn't let us to suggest some improvement and make bets on a rising of the euro in a foreseeable future, probably for a year at least. So we think that downside tendency should continue, and our medium-term target stands around 90, below the parity. So this is what we're watching for. Besides, if you'll take a look at the policy of the European Central Bank, you could see that it's definitely lagging behind the Fed. So in general, Fed is late with the efforts that they do, but they do it a bit faster than Central Bank intends to do, and European Central Bank is even more late compared to the Fed. That's why this will be 2 steps back behind the Fed. And besides, European Union has inner problems in their own economy. So, for instance, the United States is self-sufficient with the hydrocarbons. It has the united economy, while the European Central Bank European Union consists of the different countries with absolutely different financial situation. Besides, it doesn't have own resources to support domestic production industry. So this put additional pressure on economy in the European Union. So speaking on the technical situation, we on Friday talked about 105.15 support, although we thought that might be not as fast as market has reached it, but still market currently stands in an important area. Why it is important? Well, this is some separate line between bullish sentiment, bullish performance, and bearish performance. Yes, currently with this action, we could say what a bullish performance you are talking about. This is just tail closing for just massive collapse that we see on the market, fast acceleration, something of that sort that we have. That's true, and that just tells us that the downside continuation definitely more probable. But from the theoretical point of view, we need the confirmation, we need the final breakout of this level to suggest that market has to go below these lows. This will be some kind of the indicator. Besides, you can see that this level coincides with the daily average sold, which creates the potentially area that could trigger the pullback, some retracement in the next week. For example, before the Fed meeting. So markets could take some rest and be prepared for a Fed meeting, which is retracement might happen. And that's actually the way how market will respond to this level tells us whether we could get some kind of the A, B, C, D pattern to the upside, right? Or here will be just minor pullback and market collapse down, which is our currently actually central scenario. We could get the big butterfly and here could be formed, minus pullback up from this level. That's actually what we are watching for. And particularly speaking, our task for a coming week is just watching for a pullback and searching chance to go short with the current environment and with possible downward continuation. For this purpose, we intend to keep an eye on few levels. Here's the XOP has been reached, right? So we have the agreement as well. Speaking on the levels, there are two levels to watch for. Most probable is 106. Because market currently oversold, maybe the pullback will be a bit stronger than on 105.60. So this confluence looks most suitable to consider taking the short position. Additionally, we will be watching for 106.70, because if our suggestion is correct, and that market really should turn down and keep going lower, market should not exceed the 618 level. So it should stay below this area. That's the second moment that we need to keep an eye on. If both conditions will be completed, so we could get a good short position with downward continuation, and market confirms that no second leg, no second upside leg happens on the daily chart. So this is our trading plan for next week.